Hey guys, so in today's video I wanted to talk to you about this absolutely beautiful 1 to 5 risk to reward trade that we caught yesterday on the euro versus the dollar. Now this trade encompasses two of my biggest trading strategies and the only trading strategies that I run with. One being the Judas swing, which is all over my YouTube page, and the second one being the order block strategy and taking into account breaks of structure, market structure shifts, and everything far and few in between, including liquidity and all sorts. Now, not only did I take this trade myself, but so did the members in the Discord community. However, on this specific trade, the signal that I sent was for this initial first trade, which was this one right here. And as I said right here, that we could push higher and go into the higher and extreme zone. So then we could get a potential re-entry, which is what we got right here. And look at that. From there, a beautiful drop off. Now, this did also include a news event as well. But as we're all aware, 9 times out of 10 news is priced in already. You just need to understand where you are in terms of structure. So let's break this trade down together so you guys can see exactly what it was that I was thinking as this trade was playing out, and then we can break it down together so you guys can really understand why it was this trade that I took personally. So let me rewind and jump back to right here. Actually, let me go back a little bit further so that we are just before the Asia session ends. So what I'm going to do is I'm also going to remove all of these drawings right here because I don't want there to be any clutter on the screen. Right, so first things first, we have to really understand where we are in line with structure. So on the daily time frame, what can we really see? We can see that we created a higher high, a higher low, a higher high. And then we ended up breaking this higher low right here, signifying that we've just had a market structure shift on the daily time frame from bullish to a bearish trend. So now what is our order flow anticipation is that we should see a lower high and then a continuation lower to put in a new lower low. Therefore, the higher time frame, which is the daily, is telling us that we are bearish. Now, if we drop down to the 4 hour, obviously the lower high leg of the higher time frame is going to be bullish. Therefore, on the 4 hourly, we can see that we're creating a series of higher highs and higher lows. And as we can see, we're currently stuck inside of this trading range. So what have we got? We've got this higher high, higher low, this higher high, and now we're stuck in between this trading range. So we had the breaker structure to the upside right here. After that, we're stuck inside of this range. So anything happening in here is simply just complex structure. Now, how do we trade complex structure? Well, no matter what time frame you're actually on, that market structure is going to be relevant to that time frame. So if we drop down to the hourly, again, what we can see is that we are still inside of this range. We've had a breaker structure here to the upside, and now we've got this high and this low. Now, anything in between is still complex structure. So what can we really do? We can really simply just mark out areas of interest that we have in place. So what can we really see? We've got on the 4 hourly, this 4 hourly zone, which is where price reacted from. And this is the extreme of the move that broke structure to the downside. Therefore, this is a very key area where we can see a reaction from price. That's exactly what we got here with this massive wick that's being left. Now, if we continue with our downwards move in time frames, what we can see is that we've got this hourly zone right here. And the reason why we're picking this hourly zone is because this is where we got this impulsive move to the downside that left all of this fair value gaps and also broke structure on the lower time frames. So if we mark this out, what we can now start to see is that we've got the extreme 4 hourly zone, and then we've also got this sort of hourly zone right here that we can potentially see something happening from. So I'm just going to remove it for the time being, but understand that we have a zone right there. So if we drop down even further and go down to the 15-minute, what else have we got? Well, we've got this sort of liquidity that is built right here. And right above this liquidity, we've got this inside bar. Now, this inside bar signifies that there was consolidation on the lower time frames, and then we got this impulsive move out. Therefore, this area right here is also a very key area for us to take a look at. So let me mark this out too with this red box. And then if we go even further down, what can we see? On the 5 minute up here, we've got this extreme zone, and then we've got this extreme consolidation right here with this liquidity just below it. So what all this gives us is confluence that price can potentially push higher into these zones, where we can now start to look for shorts, which will put us in line with this higher time frame bearish trend. So we've marked out our higher time frame areas of interest. Now, what's our next step? Our next step is to now follow the simple idea of the Judas swing framework. And the simple idea is that we mark out the high and the low of the Asia session. And then once we mark out the high and the low of the Asia session, all we simply wait for is a break or a sweep of either side of liquidity. And then we wait for a market structure shift in order to take our entries. So here's the low of the Asia session range, and here's the high of the Asia session range. Now, the reason why this says breaker structure and market structure shift is because we will see this play out as we move forward with how market structure unveils. But for the time being, let's jump up onto the 15-minute time frame. And what can we see happening? Well, we can see that price has actually swept the Asia highs now. Now, why is this relevant? Because overall, we are looking for shorts from one of our areas of interest, whether this be this one or this one up here. We don't know which one is going to get tagged, but wherever we end up going, as long as we tap into one of these areas of interest, we then want to start to look for a market structure shift so that we can take price down in line with the higher time frame. Now, we've also swept the Asia high. So this gives me even more confidence in looking for shorts, because then that way we know that our higher time frame bias aligns with the Judas swing framework. So once we jump up to the 5-minute time frame, what can we start to see in terms of market structure? Well, we've got this higher high, this higher low, and this higher high right here. Therefore, we can't start looking for a trade just yet because there has been no market structure shift. So let's mark out what we are seeing. So we've got this break of structure to the upside. And now for us to get a market structure shift, what we really want to see is this low being broken. If we see this low being broken, then we've now put in a lower low. And then after that, we would want to see a lower high and a continuation lower. So let me play price on and let's see what actually happens. So we get this break to the downside. And the reason why I have this marked as our market structure shift is because if we look on the 15-minute, that was my valid market structure point. So we've had a sweep of the high, and then we've also broken structure to the downside. So what have we got in terms of market structure? A higher high, a higher low, a higher high, and then we've broken this higher low, giving us a lower low. So what is our next anticipation? Well, our next anticipation is that we get a lower high somewhere in this region, and then we get a continuation lower. So now that we've understood where we are in line with the higher time frame and also the Judas swing framework, and we've also identified our entry criteria, our next step is to figure out where we're going to take an entry from. Well, for me, what I decided to do was take our first entry from this inside bar right here. And the reason why I chose this inside bar specifically is because this is where we had on the lower time frame, as we can see right here, we had this sweep, and then we had this impulsive move down which broke structure, which left a fair value gap. So this was a very high confluence area that I was interested in because I knew that this is where price can magnetize to and give us a good reaction from. However, I was also looking at this fair value gap right up here because this was the extreme. Now this is the extreme of the move, and with EUR USD, what I've seen from my backtesting is that 9 times out of 10 it doesn't go to the extreme, but when it does, it is a very high confidence trade because it has gone to the extreme. So the first entry that we had in this trade was from this inside bar right here. And then where were we targeting? Now for our targets, what we have to do is jump up to the higher time frame. Now what can we see? In terms of the higher time frame, we are still in a bullish trend. We're putting in all of these higher highs and higher lows. Therefore, where is our immediate attention turning to? Well, our immediate attention is turning to this 4-hour zone right here. And the reason for that is because that is where we had all of this impulsive move to the upside, which put us in line with the 4-hourly trend. So this order block right here was our targets, because again, the 4-hourly is bullish. So we want to make sure that we have immediate targets in place that are in line with the current market structure. Of course, if we held this trade longer, then we can always target the lows of the higher time frame leg, which would be at the very bottom of this daily zone right here. However, for immediate targets, we were targeting this 4-hourly zone. So if I drop down to the 5-minute, that was our entry, and then we put the targets right here for a beautiful 1 to 5 risk to reward trade. And if I play price on, what we can see is that price tagged us in, gave us a reaction, but then took us out. So after price took us out, I let everyone know if anyone is looking to re-enter, then this fair value gap right here was the perfect area to enter from. So now that we've been taken out, we can delete this, remove this out of the way so that we have a clearer chart, move this to the side. And then our second entry came from right here. So this was the extreme zone, stops just above the high like this. So stops just above the high like that, and then targets right here at this 4-hourly zone. So this was for a nice 1 to 4 risk to reward trade. And if I place this on, we get the tag in, and boom, price starts to run straight towards our take profit. So price missed our take profit by just a couple pips, came back up, but then eventually it started running straight back down and went straight to our take profit. And this trade was absolutely perfectly analyzed, because from this trade, what we can start to understand is that even though on the higher time frame we're bearish, the 4-hourly is bullish. We've identified key areas of the market that we can get a reaction from. We've encompassed not one, but 2 trading strategies together to give us this super high quality trade. Not only that, but whilst everyone is trying to take trades in random areas, all here, we waited all day until we started to form this trade idea and price came towards our entry. We didn't chase the market. We let the market come to us. Yes, granted, we took a loss on the first trade. However, we understood that there was a potential that price could reverse from the extreme zone. So we also took the trade from here as well. And that way we capitalized on not only a loss, but we also managed to pull out a win. And if I play price on and just wait, there we go. So price bangs all the way down to our take profit. And that's the power of being a trader who sits on their hands and lets the market come to them, because you're no longer chasing the market. You're not going after every setup that you can see. You're not going after these low quality trades. You're marking out and analyzing the perfect setup. You're waiting for the market to come to you, and then you're taking a trade based off of statistical analysis and being a mechanical trader. Now that's what it's all about, and that is how you become profitable. So I hope you guys understood the theory behind why I took this trade, and I hope you got some value. And if you did, please don't forget to leave a like, comment, and subscribe, and I will see you guys in the next video.